All right, guys, we're about to get started. So just a little bit of housekeeping. Please be mindful of the other folks on the conference call line. So if you are, eating your lunch or working on paperwork, just try and do it away from the phone speaker, or put your phone on mute so we don't get the ruffling going on in the background. All right. So everybody should be on a screen right now. This presentation will begin shortly. All right, and we'll get started right now. All right, so thanks for joining us for the third now, broker webinar. Today we're going to talk about the uses for HSA, HRA, and FSA. Most of you guys are probably extremely familiar with them, but the uptake amongst the small employer market segment could be a little greater. So we're going to try and refresh your memories on it, and hopefully you guys can discuss the options with your clients in order to help save them a little bit of cash and premium. All right. So basic definition of an HSA is a health savings account. It's a tax-free savings account which you can use to fund future medical expenses. Money put in there on a pre-tax basis, which is really nice. And as long as it's used for a medical expense, it can be used tax-free as well. All right. They have to be used with what's called a high deductible health plan, which has a very specific definition. The majority of services, if not all services, need to be subject to the deductible except for preventative. And there also needs to be a minimum individual deductible of $1,300 annually or $2,600 for a family, again, annually. So those are the general guidelines of a high deductible health plan. On all of the health source marketing material and the plan reference guides that you guys have, there's a check mark for any HSA compatible plan. All right. The big thing here for the HSA specifically is that the subscriber owns the money. So if a group contributes money to an employee, that becomes the employee's money, even if they leave the company. All right. So it's similar to a fully vested 401k or something like that, where once the employee leaves, that money goes with them. Okay. All right. So to use your HSA, you basically just, it's essentially a reimbursement is kind of the easiest way to do it. A lot of them have debit cards that are linked directly to the accounts that you can use if the provider's office can accept it. So if you're doing something, you're picking up medications, you're maybe paying for an MRI, some facilities can accept a debit card. Some doctor's offices maybe can't accept a debit card, so you would pay cash and reimburse yourself. An HSA will let you roll over any money you don't spend, and you never lose it. So it's always your money. It's always going to sit there. You don't lose it even if you stop enrolling in a high-deductible health plan, and you can still have access to those funds tax-free. They don't go anywhere. They're always there. All right. And then another great benefit is after the age of 65, you can pull money out for non-medical expenses without paying a major tax penalty. All you pay is a normal income tax, according to whatever the IRS's guidelines are for IRAs. All right. And lastly, the HSA accounts are administered by a multitude of different banks all around the country. Some of them are online only. Some of them have brick and mortar locations. I know here in Rhode Island, we have London Health. They work pretty closely with a couple of the carriers in the state. We have at Health Source here, we use Avidia Bank. And if any of your clients enroll in Avidia Bank's HSA, they get all of their fees are waived. So that can be a really nice value add for your clients there, if that individual employee or the group is looking for an HSA. I know Bank of America does them through their online portal, but they don't have any services in their brick and mortar stores. So it does take a little bit of research to find the right HSA, the lowest cost HSA, or the HSA with the features that you want. Some of them have investment accounts, some of them are fixed interest rate, some of them, there's all sorts of different ones. All right, so do some research or gather some information from your client on what kind of HSA they want to see, and reach out to us and we can help guide you to your different options there. All right. As far as who can have an HSA, again, you just have to enroll in a high deductible health plan. You can't have supplemental insurance that covers your deductible. and also have an HSA. So if you have, for example, certain medical bridge policies, you can't have that medical bridge as well as an HSA account. At HealthSource, we do have a medical bridge policy through Colonial that is HSA compatible, which is always nice. So if you're looking to implement ancillary products alongside of, say, an HSA or a high deductible health plan, there is an option here available for you and your clients. The only other real types of insurance available to an employer that you can have as a high deductible health plan would be, auto, dental, vision, disability, long-term care, life, stuff like that, but nothing that actually covers the deductible for you, all right? And then the last couple of bullet points here, the maximum contribution for an individual on an annual basis is $34.50. That doesn't do with that has nothing to do with the plan year. That's exclusively the fiscal year, all right? And then the maximum contribution for a family during the fiscal year is $6,900. And when you turn 55, if you have an HSA, you can actually throw an extra $1,000 as a catch-up provision, all right? So there's a lot of flexibility with these. They can really help lower the actual premium costs and help if you're the true saver type or you like planning things out, or your clients are, you can really help guide them into the future a few years down the road. All right. And now the limits on who can't have an HSA is if you're dependent on someone else's tax return, you can't have an HSA. If you're on Medicare, you can't be contributing to an HSA. If you have an HSA and then enroll in Medicare, that HSA doesn't disappear, but you just can't open up a new one, all right? And then again, if you have any type of insurance that helps pay for your deductible. The last one is a spouse who has an HRA or FSA that covers the entire deductible of the high deductible health plan. So if you have a spouse, works for a company, has a company-sponsored HRA, which we'll get into later, and they have, say, a $3,000 deductible, but that HRA covers the whole thing, you are not eligible for an HSA. That's kind of a fringe case, but it does pop up a lot where you have, a dual income household, okay? All right, so now moving on to HRAs. HRA is Health Reimbursement Account. It's an employer-funded account where the employer maintains control of the funds. Okay, there's not an actual bank account set up with all of this money that the employer has to transfer into it right away. It's essentially a promise to pay is what it kind of boils down to. The employer can set it up to pay any portion or all of an employee's deductible. So I have an example here that an employee pays the first $500 of a $1,500 deductible, and then the employer has a promise to pay for the last $1,000 of that deductible. You can divvy it up kind of however you want. A lot of times it's the employee that picks up the first portion and the employer picks up the remainder. But it can be used, again, for any sort of medical expenses. It'll reimburse employees for their out-of-pocket stuff, out-of-pocket costs. And it can actually also be used to pay premiums as well. There we go. All right. So obviously the biggest use for an HRA, as I just mentioned, is reimbursement. The big limitation on reimbursements is it can't exceed $49.50 for a single employee or $10,000 for an employee with a family. All right, so you can't just use this as a convenient income vehicle for employees. It needs to be reimbursements for medical expenses that they incur throughout the year. All right, and again, it can reimburse things for deductibles, co-pays, co-insurance, premiums, all that stuff. All right. The HRA account or the manager, the company you use will have the tools available to your clients or you to monitor how much the reimbursements for each employee are totaling and when they're approaching those limits. All right. They also will outline processes for your clients on how to properly reimburse employees and not incur any sort of penalty or encounter any issues. All right. So lastly, we have flexible spending account. These seem to be much more common, at least in my experience in the small business market in Rhode Island. Here, employees decide in the beginning of the year how much money they want to set aside on a pre-tax basis for healthcare-related costs. So they can say, you know, I'm going to set aside $750 this year into my FSA. What happens is that money becomes immediately available to the employee, and the employee throughout the rest of the year gets those monies deducted to reimburse the employer. All right? So it can be used for all sorts of different things, not just medical. It can be used for child care. It can be used for commuter passes and bus passes and, you know, parking passes throughout cities. Contributions are limited, again, to $26.50 per year. And if your spouse has access to an FSA, they can also contribute $26.50 per year to their FSA. So you can have, it's not like where you have an HSA and, you know, if your spouse has this, you can't have that. Here, it's each partner can have their own. All right? These are also nice because they can be used outside of medicine, again, but the issue is if you don't use the amount that you set, you can only roll over a certain amount to the next year. You can roll over about $500 as of this year to the next year. And there's a time frame where you can use that money. So each FSA account is going to have different guidelines. You can choose either to roll over $500 or have a grace period of 2.5 months. It kind of depends on the employees and that specific client on which one you choose, but you can't choose both. You have to choose one of them. So that's a limitation that's causing these FSAs to kind of fall out of style, and HRAs and HSAs are becoming a lot more common. All right. So in summary, you can see the summary slide here. We have the HSAs. They can be funded by employer, employee, pre-tax. They're awesome. I know I personally have one. There's investment options. There's a fixed interest rate option. There's all sorts of stuff you can do with it if you really want to get into stuff like that. Contributions are pre-tax. Money comes out tax-free as long as it's eligible. HRAs are great for the employer because the employer maintains control of the money. It can be used to reimburse employees for a number of different medical expenses. They don't accumulate in a separate account, so it's a less administration headache for the business owner. They don't have to keep track of all these different statements, all these different bank accounts. And the FSAs are nice for the employees if they know they have fixed costs coming up. You know, they pay $100 a month for a parking pass in this city, and they want to be able to have that come out of their paycheck. All right. So there is a chat function within the WebEx here. If you guys do have any questions, type them into chat, and I'll do my best to answer them. If I can't answer them right now, I will get back to you by the end of the day. And, of course, you guys can always reach out to us. Again, my name is Elias. My phone number and email are there on the screen. If you want to meet in person, if you're already certified with HealthSource, call your BET rep, give us a buzz. If you're not certified with HealthSource, reach out to Fran. She'll sit down with you. She'll come out. We'll meet somewhere, and we'll figure out what we need to do to get you appointed and get you selling HealthSource. And again, if you have any topics that you want to see for these webinars, something that you think is relevant or confusing that you want clarified, let us know. Your feedback and the topics are really going to guide where these webinars go. All right?
Thank you, Elias.
All right. Thanks, guys. So if you guys have any questions, we can hang out here. We can have the conference call. You can type them into chat, whatever's easier for you. All right? All right, so it sounds like there's no question, so it sounds like everybody is extremely well educated on them. Take care, guys. Have a great day. We'll talk to you guys soon.
You too. Bye.